All right, Kendra, how are you? Me and Rob are here. Just going to introduce ourselves. Rob's going to talk about the deal a little bit later. And we are having a Zoom call October 15th at 7:30 Eastern for everybody to come to fully hear about the deal. But more importantly, we want your friends to meet us and listen to about our experience. And that's more important. You invest in us, not just the deal. So when I'm currently 51 years old, and I grew up in New York. And 23 years old, I bought my first four family that my father taught me how to do. Went to college for IT and didn't want to do that. So I went to the restaurant business with my older brother and my dad. And I won 12 awards in a family restaurant along the way. And then in 2013, that was 1998, I bought the four family. 2012, 13, I started investing out of state into Tennessee, where 2013 to 19, just me, my brother, Jake, and another partner, Mike, no syndication. We bought 1,800 units of our own money, just ours, about 15 deals. And then in 2020, I was able to sell the restaurant after 25 years of blood, sweat, and tears. Um, Rob, you sharing your screen?
I don't know what I'm doing. I'm trying to get out of it.
Oh, okay, no problem. There you go.
Sorry
So,
about that.
yeah, no, that's okay. After 2020, right before COVID, sold the restaurant, and then I also started investing in Kansas City, where we closed about another 20, 25 deals I have. So currently, I have 52 multifamily deals. I've been through the recession of 2008. I've been through this recession of 2023, 24. It's a multifamily recession of many foreclosures. I currently own 29 generational wealth deals, which are just like four or five partners, not a syndication or money raising. They're going to my daughters. And I own 23 syndications where we have raised money, and those are transactional. Some are 3 to 5 year holds, some are 5 to 7 year holds, some are 7 to 10 year holds, which I like. Um, I both are great deals and serve a purpose. Each one serves a purpose. The generational wealth ones are going to go to my kids, and the syndication is more for transactional, like I said. So I'm just very grateful that I'm able to have great partners and invest in multifamily. And Kindle has joined us on a few deals. I've known Kindle for 3 or 4 years now. I met him in Jake and Gino, my bro's community, and I also have a mastermind. But in saying that, I want to hand it over to Rob. And Rob, I want you to introduce yourself. You have a similar background, which is pretty cool. And then just talk about the deal. I love this unit. It's a 20 unit deal. It's a brand new A class. They're just finishing it up. There's it's a very safe deal for new investors because you're not buying a heavy lift C class with a ton of $1 million of capex and work that's needed. Not much is needed. These deals are great for new investors that they don't have to worry. They're safer. So Rob, introduce yourself and please talk a little bit about the deal. And once again, I'm going to send them the Zoom link for the 15th. Take it over.
Yeah, so for everyone on this call, very nice to meet all of you. I know everyone is busy with your roles as a doctor in your prospective fields, so it's great to have an intro video so that we can build relationships with you from the start. Marco and myself are very, very close friends, and we are business partners as well. We have very similar stories where I'm born and raised in New York and New York City. I currently reside in the state of New Jersey over the last 6 years with my wife, who's a school teacher in New York City, and my two children. I was in the luxury hotel, hospitality, and food and beverage space for over 20 years, representing world-renowned hotels across the United States and the world, and always investing in real estate throughout my entire 22-year career. But about 12 years ago, I left corporate America to handle everything full time. So, as a team, you have a ton of experience with just the two of us without our other two partners on this deal. But I've transacted in over 119 deals from single family homes to small multifamily to development projects to large multifamily, as well as the asset classes of student housing and industrial warehouse flex space, predominantly in Pennsylvania, but I've owned in New Jersey, New York, South Carolina, North Carolina, as well as Ohio, Missouri, and Oklahoma through general partnerships, limited partnerships, and a hybrid of both. Marco and I are the same age. Marco and I have deep experience in corporate America and entrepreneurship, as well as in real estate. It's about the relationship first. So it's very, very important for us to meet you, to eventually shake hands with you, and to grow our relationship. Because in today's crazy world of social media and you know, everybody is sending a lot of information in certain channels, but they're not shaking hands, breaking bread, and building the relationship first. That's the bread and butter of everything we do. So we hope that we can grow a relationship with you personally first. We work with ethics, morals, professionalism. First and foremost, that's the only important thing. The money and the deals will follow. As a result, we've built a beautiful community. Marco is the founder. We have 300 community members, tons of doctors, teachers, entrepreneurs, financial professionals, lawyers, you name it, we have it in the community. That's why we've invested with so many doctors in your similar um, situation. Now, the deal that we're talking about, we'll get into it in a different webinar, but briefly, I think it's an incredible opportunity for folks such as financial W-2 employees, doctors, and so on and so forth, because it's in a very good part of the Northeast. It's in the state of Pennsylvania, in the city of Scranton. These are new construction duplexes. There's a portfolio of 10 of them, which give us 20 units. They're all 2025 new builds. So we're purchasing them at the end of 2025, brand new construction, 100% occupied, which means in today's very volatile market of high inflation, high labor, high expenses, and in a state that has a lot of vintage properties with deferred maintenance, we are buying brand new development buildings that will have all separated utilities, which will lower our expenses. The brand new construction will give us an opportunity to capture lower insurance, which is skyrocketing across the country right now. We have a partner who has their own property management company, so we'll have in-house self-management, which
Let
is a
me stop
huge
you right
benefit.
there. So, guys, the most important thing is I have 3,800 units. Most people use third-party property management and fail and don't do good. They'll do good, they'll do okay, but a lot of times they fail, especially in recession now. All my 3,800 units are self-managed. I have a self-management company in Tennessee with my brother and Jake, and I have one in Missouri, in Kansas City with Chris Jackson, Sharpline, that we managing. So 2000 and 2000. Now in Pennsylvania, I started buying with Rob, and we self-manage there with Jennifer and her company. So I am a big proponent. I'm not going to buy deals if I can't self-manage them. I'm not going to trust a third-party management company. They do okay in the beginning, and then they struggle. They're never going to work as hard as we work on our deals. So a lot of people are investing in these deals and giving their money, and they're the people buying these deals can't even manage them. They have other companies manage them, not as good as them. So that's a big proponent. I cut you off, but yeah, I mean, on top of the self-management, give the tax abatement you said is something good. So and keep going, Rob. I'm sorry I cut you off, but the self-management piece is very important.
So, um, okay, yeah. So basically, I was sorry. Let me get my train of thought back. So in addition to some of the benefits that I was saying, you're going to have a lower expense ratio, self-management. We have quality tenants. Most of these particular tenants will be future homeowners. The higher end professional because of the quality of the properties and because of the higher rent that we're trying to capture. So all of this is going to lead to a lot lower risk for you, the investor. We're walking into a property that was nicely negotiated with a 10-year tax abatement so that there's going to be many benefits for you. So let's say you're a doctor and you have 50,000, 100,000, 200,000 to spend. What's going to happen with my money? We're going to get into this at the webinar, but real briefly, we want to be able to offer you cash flow from day one, which this deal offers. We want to be able to provide you with a preferred return, which this deal also offers. You're going to have tax shelters, depreciation, and cost segregation, which this deal offers. The velocity of capital is important for us as well. So every deal that we underwrite and purchase, we'd like to provide you with an opportunity to receive that money back as quickly as possible. And that normally happens within years 3, 4, or 5. So this deal will allow us to return most of your capital, if not all of it, back by year 3, 4, or 5, depending on how the movement of the market transpires. As this is a good time right now because interest rates are going down, values are going to go up, cap rates are going to go back down again. So this is a really good time to get into the market on a stabilized asset as this. Okay. And in addition, there'll be an exit that will be profitable as well. So many different benefits will affect you positively on this deal based on the underwriting, the team, the management, the new construction, as well as the growing emergence of this particular market. So we can get into all of that during a webinar, but most importantly, Marco and I are well diversed with many different assets. You would be working with a very, very solid and experienced team who completely understand the value of your time, your money, and the returns that you're looking to approach. And we have self-management in place with tax abatements, low maintenance, and lots of good amenities and benefits to this asset. So great to get to know you guys on a simple intro call. We look forward to the webinar and any questions. We can answer anything when we eventually talk to you.
We can get on
And
we can get on one-on-ones, whatever people need. Like when after the webinar, we keep it light. We don't want to get technical terms too advanced because we could start getting to real technical terms of NOI, LOI, PSA, all that stuff. But we keep it kind of light so you understand it. And whatever you don't understand, we want you to write down a question and we fully transparent. We want to get on Zoom with you and answer your questions because we want you to be excited to invest, not like, hey, I'll invest and be nervous. There's nothing we don't want people to be nervous about it. This is exciting investing in great properties. I forgot to mention I have three beautiful daughters. I retired in 2020, and why do I keep doing this, keep going? Deals 1 to 14, 15 were for me. Deals 16 to 52 are for my kids. So this is a great diversification. I tell all doctors, accountants, lawyers, whatever, you do your crypto, do your stocks. If you need to be invested in at least one multifamily deal, because it is the best asset class, it is get rich, get wealthy slow, not get rich quick. So that's what I always say is learn a little bit. You could be passive and still be busy at your W-2. You don't have to be active with the right people. And it is the best asset class. And one thing, I got to apologize for cutting you off, Rob. I have a tendency to do that. I cut you off.
oh, no worries at all.
But I had to reiterate, like I always love to point out the importance of self-management. That's what makes us stand apart from the other people that you're going to want to give your money to on these deals. And that's it. I mean, great to meet you. October 15th, 7:30. We're going to go over the full deal and then we can answer any questions. Look forward to it. Rob, thanks,
Look
buddy.
forward to it, guys. Very nice to meet everyone. Talk to
Thank
you soon. Thank you.